In this particular video, we're going to talk about an important signal, a potentially important sell signal that could get triggered on the stock markets very soon, if not potentially today or tomorrow. From about here. So I've been short in the stock markets really from this region. As you can see here, currently sitting in about a 2,600 pound profit. Just to let you know, I only risked about 300 pounds when I began this trade. So that's about a risk reward of 9 to 1, which is not bad at all. And by the way, in our member videos, I've been calling for a stock market drop really from about here. Again, from the stock market was about here. I've been warning about a potential drop in the stock market. So we've been ready for this for some time. The bottom line is that now we've had this drop, what could this potentially mean? Well, there is an important signal that almost every chartist and every analyst knows about, and that's called the Dow theory sell signal. The Dow theory sell signal, put it very simply and plainly, is this. Firstly, you need at least a 3% drop in the S&P or the Dow, but mostly the S&P. And once you get a 3% drop, then you need a 3% bounce, which we've had as well. So we've had both the drop and the bounce. Now, for the sell signal to take effect, you need the S&P and one other market, which I'll tell you about in a few moments, to drop and then take out the lows we made before that prior bounce. So in other words, for the sell signal to get triggered, we need the S&P to drop, which it has done, but also to take out the lows it made on the first prior drop that you see right there. And not just the S&P, but one other key market, which is the Dow Transportation Index. Now, if you've been watching our previous videos, you know this by now because I've been mentioning this Dow Transportation Index for quite a long time. Let's go on this weekly chart. Now, in a previous video, you may recall I mentioned this, that this is a leading indicator. Why is the Dow Transportation a leading indicator for the economy and the stock markets? Because when anything gets manufactured, it has to be shipped and transported. Remember, there are companies that make stuff and there are companies that take stuff. Therefore, transportation is very sensitive to shifts in the economy. And look at this, the Dow Transportation Index has now broken an important supporting trend line. As you can see right there. There it is. This week, we broke that trend line. That's not a good sign, by the way, for the economy or the stock markets, which means we're beginning to see the first leading signals of a major drop in the stock market and indeed potentially a recession down the line as well. So here's the thing. On the Dow Transportation, if we just go to the daily time frame chart, we have actually seen already the sell signal on this. So we've already had at least a 3% drop, at least a 3% bounce, and we've taken out that previous prior low. Okay, so the Dow Transportation seems to meet the requirement for the Dow theory sell signal. By the way, not just the Dow Transportation, just to mention quickly, small cap stocks, the Russell also had a major drop yesterday as well, which is not looking good either. But in any case, what we need to see now for the Dow theory sell signal to be confirmed, if it hasn't already been confirmed, is we need to see the S&P follow through lower and essentially to take out those lows that we see here, okay? Which I think is quite possible, indeed probable, in the next few days. So if the S&P now follows through lower and takes out those lows we made about a week or so ago, essentially the August lows, then the Dow theory sell signal could actually come into effect and become confirmed. Which means what? Essentially what it means is that the stock markets could be due for a much more significant drop. Let me just go back a little bit. In other words, what we could be seeing is a minimum of 10%, at least a 10% correction or drop in the stock market. Which means what? Which means that by the end of this year, we could see the stock market essentially, we see this rally here. This is the rally that started back in from December and continued all the way to more or less July, August. We could see the stock markets wiping out, indeed, to put it less politely, excuse the expression, but essentially pooing on this entire rally. If not the entire rally, but at least most of it. I would say at least 50% to 60% of this rally could be wiped out potentially by the end of this year. So we could be setting up for a major drop down the line here. Now, 4 months ago, I showed you this video, and here's the video you can see here, is this chart warning of a recession. That was back in March when I posted that video. And in that video, I warned of a potential recession. In fact, here's the chart I was talking about the yield curve inversion. And funnily enough, it is only now that the mainstream media is finally talking about this. In fact, here's CNN last night finally talking about this yield curve inversion and recession warning. Here it is, very quickly.
Fears of another recession causing panic on Wall Street today. The Dow taking a dramatic tumble, ending the day down more than 700 points at the closing bell, 800 there on the chart right there. The huge slide was set off by one single warning, experts say, a specific economic indicator that has historically predicted oncoming recessions, a measure that flashed a red warning light for the first time since 2005.
Which is the inverted yield curve. And what that essentially means is that it costs more for a borrower to borrow over a shorter amount of time than a longer amount of time. That is an unnatural state of affairs. And if you take a look at this chart, recessions have followed each time we've had an inverted yield curve. This is very troubling to the market.
All right, so as you heard there, they were talking about essentially what we've been talking about in our videos for several months now. And guys, let me say this. If you want to know what's really happening in the markets, then keep watching our videos and keep watching our channel, because the mainstream media is lagging way behind the markets. Now, here's the big question. The question is, if indeed we're getting these recession warnings, then what could it mean for the stock markets and for potentially Bitcoin as well? Now, here's the thing. As far as the stock market is concerned, we've seen in previous times that usually when there's a yield curve inversion and when we see this recession warning, there can be a delay or a lag of time before the stock market crashes. For example, 10 years ago or over 10 years ago, the recession warning came in 2006 and the market actually continued to rally higher before it crashed. Okay, so sometimes there's a delay of about 12 months before the stock market crashes. Okay, back in the year 2000, it was actually a bit more quicker. So the recession warning came very soon, close to the actual crash that occurred in the stock market. So sometimes it's quick, sometimes it's about a delay of about 12 months. The fact is, it doesn't really matter because the stock market usually tells us what it wants to do. So that was back in the last couple of recession warnings. What about, let's say, Bitcoin? Truly, we don't know how Bitcoin reacts in a recession. The last time we had a recession was back in 2007, 2008. And guess what? Bitcoin did not exist back in 2007, 2008. So nobody really knows for sure how Bitcoin acts in a recession. However, I did make a video several months ago about what could potentially happen to Bitcoin if a recession and a stock market crash occurs. What I said in that video was I don't think a recession is a good thing for Bitcoin. If you want to know the reasons why, go ahead and watch that video. I don't want to go through it all over again, but I personally think that a recession, once it starts and once we head through a full-on recession, I personally think it could be a negative for Bitcoin, not a positive. Now, that might be a good thing or a bad thing depending on which side of the equation you're on. If you're looking to buy Bitcoin for the long term, having cheaper Bitcoin prices actually might be a good thing. I don't know why anyone would think that's a bad thing. Having Bitcoin prices cheaper, a lot cheaper, would be a good thing for the long term. However, I should say that not everybody thinks that a recession is going to be a bad thing for Bitcoin. And again, my friend Zach mentioned that in a previous video as to why he thinks that a recession might be a positive thing for Bitcoin. So that's a different theory altogether. All right, guys, so I don't want to make this video too long, but all I want to say is that potentially very soon we could be getting that Dow theory sell signal getting triggered, if not today, perhaps by the end of this week.